All right, family. All right, welcome back to another edition of Economic News. We're back, so we're gonna go ahead and get it started. All right. So this is from YahooFinance.com. We're looking at the futures market, S&P futures, Dow, Nasdaq, and Russells are all down across the board. All right. Go ahead and look at that. Take a look. They're all down across the board. All right. So I'm about to focus in and out. All right. Switch on over. We look at the FTSE and the Nikkei 225. The Nikkei FTSE 100 is up. The Nikkei 225 is down. All right. Bitcoin is up. 50 is up. See, over $51,000. The CMC crypto is up over $1,000. All right. All right. So we look at the 10-year bond. The VIX is up. The 10-year bond at 1.3010. All right. The GBP to the US dollar, some currencies is up, and the US dollar to the Japanese yen is running downward. All right. So we go into those from YahooFinance.com. We switch over to Kitco.com. All right, so we look at the New York spot price, and it's closed right now. So we're going to switch down to the world spot price. All right, you can see that gold is up. Gold is at up. Asking price 1787.60. Silver is down by 7 cents. Platinum is up $15. Palladium is down $3, and bottom asking price is 21,800. All right, so those from YahooFinance.com. All right. Take a little update down here, the gold ratio. Oh, I got an update. All right. All right, so down here, look at the gold ratio and take a look at the silver. Last time we looked at it was 77, so almost over 70 ounces for an ounce of silver to equal out to 1 ounce of gold. All right, see that trend is going downward. All right, so look at that, 65.57. All right, to 1 ounce of gold. All right, so keep an eye on silver and the gold ratio. All right, so let's go and get into some actual news. All right, here we go again. Zoltan warns repo market on the verge of major shock as key funding rates turn negative. All right, the repo market, that is actually repurchase. All right, repurchase market. All right, that's where the banks go when they need cash. They send their bonds and security bonds, the treasury bonds. They send all it over to the bank to the Federal Reserve, get cash for it, and in the process of having to repay that sometime in the near future, whether 24 hours later, 40 hours later, 12 hours later. 48 hours later, 12 hours later, they have to be able to pay it back. All right, so they need liquidity cash. But it looks like this on the verge of that is on the verge of collapsing. All right, as you see, the dollar keeps going down and down and down. All right, so let's get into this article here. Another one from ZeroHedge.com. Bank of America hints that Weimar 2.0 is coming. All right, so people, when they talk about Weimar, they talk about the Weimar Republic of the Germany of the 1920s. All right, the 1920s and 30s, when the German economy essentially collapsed after the brutal Treaty of Versailles. Treaty of Versailles was after the treaty that was signed after World War I. They pretty much laid the blame on Germany. All right, they had to pay massive amounts of reparations. All right, which caused Germany to just economy to teeter. Their war economy was already teetering during the war, toward the war's end, and then it just got hit with a double whammy after the war. All right, uh, they called it the Weimar government. All right, people need to understand what that was. Pretty much if you were in Germany, you had Deutschmarks. You could have a wheelbarrow full of Deutschmarks to go down to the store, local store, and buy a loaf of bread, and the store owner will tell you, you can keep the money. The wheelbarrows worth a lot more. So you have piles and piles of cash laying around the streets and hardly any metals what's around because that was what's more valuable. All right. So we're looking at a Weimar Republic here in the U.S. Or essentially you can have $600 with you and go to the grocery store and you may get some milk, a couple loaf of breads, and some lunch meat to go around to walk out of the store with. Heck, they might even say, "Hey, tell you what, that wheelbarrow you got, we'll take that and we'll give you a grocery car, a cart full of groceries. All right, that's worth more than all that fiat currency you got. All right, so be looking out when the banks start telling you, "Hey, this is coming." All right, we have major screaming warnings from all sectors say that something's going on, something's about to happen. All right, so be paying attention for that. All right. All right, that was from ZeroHedge.com. All right, so we go to ShadowStats.com. All right, they look at John Williams ShadowStats.com. All right, there. All right, we're going to some numbers over here. All right, January 2021 unemployment. All right. All right, we stand up. We looking down here. Bring it up closer for you. All right, even after months, the BLS, the Bureau of Labor Statistics, still cannot account for unemployment, and his bookkeeping is getting even worse. All right, pretty much he's going to an article that they can't even account for the unemployment numbers. All right, so many people unemployed, so many people being dropped for unemployment. Remember the way they changed back in the 90s, they they went from if you may be unemployed, but if you put in applications for a job, guess what? You're now counted as employed. Or if you all of a sudden dropped off of unemployment because you no longer receive unemployment benefits, they consider that as you being employed, all right, and they take you off, all right. They're inflating the numbers, okay, all right. And they claim in January 2021 unemployment dropped to 6.32% from 6.69, or unaffected. The new population controls, all right. The BLS revamped its population controls in January, which affected given equality reporting in December 2020. All right. So here they go again, inflating the numbers. I remember they can't get an account of how many people how many accurately people trust the government. All right. All right. So they're having a hard time. So they're getting inflating the numbers. All right. So this is pretty much what John Williams and ShadowSales.com. He gives you updates and the real numbers. All right. So go ahead and check that article out. All right. Yes, and I just highlighted the sector for January into covering the December into January. But if you go to February 5th, more news about the January CPI Consumer Price Index. All right, and it goes all on and on all the way up until yesterday, February 17th. All right, so get a hold of John Williams, ShadowStats.com. All right, all right, and we look over here for our final story from WorldNetDailyNews.com. All right, on a little bit, okay. Congressional Budget Office projects record deficit coming. All right. So we go here. We read a little bit of the article. All right. The federal deficit is projected to skyrocket in this decade, resulting in national debt that could be 107% of U.S. GDP, according to a recent Congressional Budget Office report. All right. So if you hear CBO, that stands for Congressional Budget Office. All right, family. All right. So they're projecting 107% of U.S. GDP within the decade. All right. So they keep pumping out one stimulus after the other. I'm not in favor of stimulus, but hey, if they're giving it to you, go ahead and take it and use it to get yourself out of fix some of your financial issues that you might have. All right, I'm a strong proponent of that. All right, now with that being said, we're gonna take a look at the USDebtClock.org because over the next decade, 107% of GDP. All right. So what you take a look at here, you got two competing issues. All right, let's take a look at here with U.S. funded liabilities, over $159 trillion, and then take a look at the U.S. total national assets. All right, all the income of the U.S. 157 trillion. All right, 157 trillion, 636, and 159.445. All right, think about it here. That is less than we're operating at just about, if you want to go ahead and round it up, at about a 1.5% over GDP. All right, so we're essentially operating at over 1.5% of U.S. GDP. All right, that is we're actually in debt and we cannot sustain that. All right, if they talk about jumping it up to 170%, 170% of GDP of the next decade, we can't pay that back. All right. We have to sell every single total asset in the U.S., tax people 100%, and we still won't be able to pay it off for a considerable amount of time. All right. So when people pay attention to this, they tell you this is the total national debt right here. Yeah, U.S. national debt 27 trillion. Look at that. It's almost at 28 trillion. All right. That number is misleading. All right. Scroll down to USDebtClock.org, and then take a look at these numbers right here. These competing numbers. All right, total U.S. national assets versus U.S. unfunded liabilities. This is everything included. All right, 157 trillion, 159 trillion. All right. So with that being said, I want to thank you for joining us for another edition of Mellow Economic News. All right. Thank you once again, and as we say, family, you are your own best financier. Take care of your finances. Remember, you're your own best banker. You're your own best savings and loans. You're your own best credit union. You are your own best banker. Take charge of your finances. Start getting together with the family, with people in your family, get that barter system going in your communities, neighborhoods. Reach out once you get established. Reach out to other communities, get that barter system started. All right. Once again, thank you for joining us in another edition of Melanie Gamma News. Let's go ahead and get it started.